Welcome, eCom Logistics Nation. Thank you for joining today's episode. We're on a mission to share e-commerce logistics insights, trends, successes, and challenges from the leaders and innovators in our space.
Mostly what large-scale enterprises are doing is they're taking some sort of optimization SaaS solution and plugging it into their legacy infrastructure to try to turn up the performance on one step or one node of their supply chain network. Many are doing that to great effect.
Welcome to the eCom Logistics Podcast. We're excited to be on location at Shop Talk, doing a remote podcast with our guest, Josh Jewett, operating partner at NewRoad Capital Partners. Josh, thank you so much for joining us today.
Oh, thanks a lot for having me.
Thank you very much.
Yeah, this is exciting, and we can't wait to jump into the conversation. You have a great background, 20 plus years of experience leading IT organizations. So would love to start by having you share a little bit about your background. Would also love to hear, what brought you into the private equity world and what your current role entail today.
Well, sure. So I actually started my career in consulting. I worked into retail technology consulting, and I had an opportunity in 2002 to join Family Dollar as CIO. So I joined as CIO. I was CIO for 13 years at Family Dollar, and then Family Dollar was purchased by Dollar Tree, one of the larger retail mergers in the industry. And I was asked to be enterprise CIO of the combined company. So 18 years as CIO of two large retailers. That could be a whole nother
that's a whole series right there, man.
We can have about the ups and downs of that. But after my time there, after leaving the company in 2020, I took a little time off, began to explore. I knew friends and colleagues that had gone from being in IT leadership positions into private equity, and that always sort of appealed to me. So I spoke to some of them, began to do some networking around that, and eventually met the team at NewRoad Capital, and have really enjoyed the work that I've been doing there.
Oh, that's fantastic. I think from our perspective too, it's really interesting that you have that practitionership experience, which is maybe a little bit unique in the private equity world. So I know we were talking earlier and you talked about one of the roles you play within NewRoads is mentorship with a lot of the founders and C-suite, some of the your portfolio companies that you lead. Are there any common threads? I talked about talent acquisition. So is it really, a big struggle on the talent acquisition side?
Well, it's probably not going to come out as a surprise to anybody that listens to the podcast, but talent acquisition is a problem whether you're a big company or a little company.
Yep.
Yeah. And our portfolio companies tend to be smaller companies. They're not quite startups, so they're post-seed stage, but they are, 40 to 50 employees, trying to grow to 70 or 80 employees as they scale their business and double their business. And that can be a real challenge, and their needs are really diverse, everything from sales and marketing to obviously tech development for the CTO's organization. And it is just really challenging time to get resources. I think there's this perception that a lot of the bigger tech firms are doing layoffs and letting people go. And so there must be this flux of talent in the marketplace. It's not really playing out that way, at least for the companies that I'm working with. So they are working with some agencies. They're working referrals like everybody else. It's just a real competitive world for talent right now.
So what is happening? So all these talent that, as an example, Twitter or, some layoffs around Shopify, whatnot. So where is that talent going? Or you think it is not the right type of talent? Is it not the tech talent you're looking for? Is it a different department? Is it communications?
I think it's any and all of the above. And I also think that not every person that used to work at a big company wants to go work at a fledgling organization, particularly if they were just, let go due to business challenges. It might be threatening to go to they would perceive as a startup that might be a shaky business model.
It's kind of taboo to talk about this, but I also feel like if you worked in one of those larger organizations, you generally work on this one little sliver of operation or execution while the startup environment just happens to be. So even the work ethos is very different in a startup environment versus what you see, right? So, on our side, when some of the layoffs happened, like, take a look at all of these people that are available in the market, because there's a couple of websites you can use, layoffs.com or something, right, where there's like a whole list. And that's the fear that you have, is like, these are people coming from larger organizations where all they saw was that one little sliver of function while in a company like ours or in a startup environment, got to wear a lot of hats at the same time. Yeah.
That's right. I think that's definitely a piece of it as well. So the size of the company, the nature of the work, it appeals to a different type of person. So one thing that if past is prologue, when there have been significant downturns that have affected the technology industry, usually 3 or 4 years later, there's dramatic innovation because a lot of the people that leave go to venture firms. They might start their own thing and all that. So it may be early yet to sort of see the green shoots of that process, but certainly the tech space is a history of renewal.
Exactly.
Creative destruction and renewal, creative destruction and renewal. So I think we're likely to see in the out years more and new and different and interesting products.
Exactly. And over the years, you've seen, so just switching topics, but over the years, you've seen this evolution, right, of how supply chain tech, logistics tech has evolved. And I guess one of the things that Dan hinted on is like, it's unique that you are a practitioner in the private equity venture space, right? How do you put yourself in the shoes of the buyer when making the investment or decisions around, the companies, like just a little bit of a thought process, and how does it kind of help you having the background today?
Yeah, I would definitely be the enterprise class buyer.
Exactly.
Right? So it's very natural for me to fall into that. When I meet a new company, I immediately want to understand what's the business use case it's trying to solve.
Right.
How is it doing that? Is it doing it credibly? And I think one of the things I'm learning now that I work with private equity, obviously, is there's much more to it than just a great product. You have to have a great team. You have to have momentum in the marketplace. You have to have an eye to competition and all that. But invariably, that's the first thing I look at is what's the business problem it's trying to solve?
Right.
Do I believe that this is a good way to solve that problem? And of course, like you said, that's what I used to do for a couple of decades as a retail CIO executive.
Yeah. And I mean, we were talking before the podcast started, was the evolution of software purchasing in enterprise environments, right? Like, I've worked in the logistics tech side for close to 18 years at this point as well. And back in the days, it was all about licensed software, one-time perpetual licenses, or you're buying core licenses or something of that nature, and you got support, versus everything now starting to move cloud. Like, do you see any space for ever be enterprise environments where you can just purchase the software like we used to back in the days? Because it just seems like everyone's moved off. No matter what you see.
I don't think so.
Yeah.
I don't think so. I think it's there are a lot of market forces pushing it in that direction. I also think the nature of the technology lends itself a little bit more to being a SaaS as a service offering. Certainly over my years in retail supply chain, what I've seen is, steps that move from transaction automation to automation and then optimization.
Right.
And that trend, as it's played out, has played out concurrently with this evolution of on-prem to cloud to SaaS solutions. And so what large-scale enterprises are doing is they're taking some sort of optimization SaaS solution and plugging it into their legacy infrastructure to try to turn up the performance on one step or one node of their supply chain network. Many are doing that to great effect. So it's a little bit easier to step into the investment, and the SaaS model allows you to pace your spend for it with your return on that investment. Whereas the perpetual license model, you basically are gambling. All your capital goes out the door at the beginning, and you're hoping to drive value out of the solution over the life of the solution. And that's a little bit more high-stakes poker. And it's a harder sale, I think, for the SaaS companies. The SaaS companies that can come in and bolt into a legacy infrastructure and show immediate payback are the ones that are going to succeed.
That's really interesting. And one of the other themes that I've noticed, and I've actually asked this question on podcast before, because if you talk about general investing space, we see the conversation with any startup is like, all I want is subscription revenue. All I want is I don't want to touch professional services, right? The fact of the matter is, and implementing a TMS or a WMS or, OMS, yet no matter how good your solution happens to be, there's always going to be an aspect of professional services, because the VC universe in general believes the pro-serve revenue is not, ideal revenue to bring in. I want the recurring revenue on the ARR, MRR side of things. How do you view that? Do you see where we can have a world where, professional services and logistics does not exist. It just seems like, to me at least, I struggle with it, that how do you implement something without doing that, right?
Well, the first problem you have is very few organizations have bench strength to implement a new product.
Exactly.
Right. And there's always a burn-in and optimization phase with a new platform.
Yeah.
And if you don't have the skills or the resources to do that, there's no way to get around professional services supplementing your activity there. I would say the other thing that's an ongoing need is, and I think a real opportunity even for some of the enterprise class vendors, is usually a solution is bought and installed for what I would describe as first order value. There was a business case that was developed to buy the solution the first time.
Yep.
But that's not the only thing that solution can do. And the world changes around that solution. So an ongoing relationship with either the firm itself, the SaaS solution, if they've got the team, or with a third party to help you to continue to drive value out of the solution over the life of the subscription is incredibly valuable and I think differentiating. So one of the things I talk to our portfolio companies about is how do you either partner or develop internally the resources that can help the customer drive value out of the solution.
Makes a lot of sense. I mean, I just wanted to bring that question up because I've seen it so often, right? Like, I work with like Manhattan's WMS as an example. It's pretty much impossible to, get away from professional services. Doesn't matter how good the solution would be. It is really difficult to just make it turnkey. And I think there is a level of acceptance as well that logistics solutions are a little different than, some of the other solutions that are out there. But a partnership is a key strategy as well, right? Like, so if you don't want, as a startup, pro-serve revenue, there is definitely the opportunity to say, okay, I'm going to have a partner ecosystem is where
that's right.
Kind of push into,
and or channel relationships, right?
Exactly.
Where you can be a white labeled offering behind somebody else's portfolio or solutions team. So yeah, those are very good strategies to get broad market reach and quick adoption, and not as the software company be tied down with implementations. Because you raise the issue of the valuation impact of having a high percentage of revenue being from professional services. That's one dimension of it. The other dimension is it's a distraction.
Right.
It's a distraction from developing and enhancing the product and and you could argue, well, it's helping me, it's helping the brand, it's helping the stickiness of the product because they're going to use it and drive value. That's all well and good, but you need to continue to drive top line growth in order to overcome the initial investment and begin to really return value for your shareholders.
That's wise words for anyone listening.
Yeah, absolutely. How does the topic of buy versus build from a technology standpoint, from a product development versus finding a packaged software solution come into play? And I know there's aspects of that from a valuation standpoint, but as you guys were talking a lot about the ability to, go down the path of a SaaS contractual relationship with a partner, are there conversations that are happening where it's like, hey, instead of using this packaged software, we're just going to build the solution ourselves?
Yeah, at least in my experience, that was our choice of last resort.
Yeah.
Because we were a large scale enterprise that invested in technology to drive certain business outcomes. We weren't a software development organization, right? So we used IT as a tool. And so we were going to be good at finding good technologies, implementing those technologies, and managing the vendor relationships, right? So we were an integration shop.
Exactly.
Right. And so that's what we did. And that's what we needed to be good at.
Right.
And it's very difficult for most large scale enterprises to be the innovators, to bring innovation to the table. And so there's billions of dollars behind private equity and venture capital investments in technology. And so why, as a large scale enterprise, would I try to rival that? Why would I harness that to my return? And so we were very much a buy first, build. We did that rarely when we didn't feel like we could find another solution in the marketplace, or it was mispriced. We were perhaps an unusual model in that we had 16,000 stores that were all little stores, and we had 190,000 employees. And so a lot of companies would approach us and say, oh, it's a per store pricing model, or it's a per employee pricing model. And we're like,
That's not going to work.
I don't think so. I don't think so. So there were times when we developed it only because there wasn't a licensing model that recognized that worked for us. But generally speaking, it was buy for all the reasons I just said, because there's a lot of smart people out there. And so managing the portfolio was what we tried to be good at.
It makes sense.
And as you see, like, you mentioned that you are always looking at new technologies or new companies, new startups.
That's what I do now.
Exactly, right? Like that's your job, right? What gets you, like, we saw the cloud and there was a lot of conversation about like blockchain in supply chain. Nothing happened on that front, right?
Nothing yet.
I'm not too bullish on it at this point. I think I've been very vocal about it as well. It's like we're trying to figure a use case out, but no one's kind of figured a use case out at this point. But where do you see some of the other stuff like generative AI, right? Like the world changed 2 months ago, the moment ChatGPT came out, right? Like, what are you bullish about right now as far as technology is concerned as you evaluate some of these portfolio? Is it business solutions, or is it like the core fundamentals underneath, right? Like, are you using some sort of new tech to be able to drive or solve for an old problem?
I agree that ChatGPT and technologies like that are going to revolutionize industries in ways that I don't think anybody knows for sure.
Exactly.
Right? And it will change jobs. It will probably not eliminate jobs. It may eliminate some, but create new ones, right? So it will definitely have an impact. It's hard to know what that immediate impact is. Yeah. I still come at your question though, thinking through business problems.
Yep.
So track and trace is a business problem.
Amazing. Yeah.
Right? Sustainability in supply chain operations is a business problem.
Yep.
Risk mitigation in your supply chain is a business problem. Supply base optimization, supplier optimization is a challenge.
Yep.
Optimizing the performance inside the four walls of your facilities is a business problem. Now, what we have seen over the last certainly 30 years of my tech career is that as new techniques have developed or tools have developed, they've been applied to those business models in new and different ways and to drive value. But still fundamentally, I'm not buying a ChatGPT solution.
Agreed.
I'm buying a revenue optimization solution.
Right.
Right. And so particularly as a large scale enterprise, I would generally want to understand the underlying technology of, let's say, AI or machine learning, or that's very de rigueur now. I mean, everybody has that, right? Or they say they do. But that's of actually secondary nature to me as a large enterprise class buyer. What's interesting to me is, am I going to drive value from the solution?
Makes sense.
And if I believe I'm going to drive value from the solution, it's because of that underlying technology, then great.
Absolutely. That makes a lot of sense. I mean, just to add to that, from my vantage point, at least, I've been having these conversations a lot lately that BI, the way we looked at it, the business intelligence problem, in every company you step into, there is some or the other initiative that's going on, and they are like perpetual initiatives, it feels like. I feel that LLM changes that, right? Like the large language models or, generative AI changes fundamentally. And I would be really bullish on companies that start working towards that, where it's the enterprise brain, where I don't need to collect the data. Let the data be wherever it is and still be able to give me intelligence and answers towards those fundamental questions. Because why do we need BIs to get the answers, right? I think it starts shifting patterns. So that's where I'm a little bullish and just wanted to call that out.
Certainly prescriptive analytics,
yes,
which is another way of saying what you said, is basically tell me the three best choices I can make right
exactly.
now, and which is the highest likelihood of success.
Exactly.
Whether I'm a store employee, a department manager in a distribution center, or somebody in the inventory management organization of a large scale retailer, all three of those use cases, the person has more information at their disposal. They've got more things to do than they could probably get done. So what are the best things for them to focus their time and attention on? And those technologies, I think, are evolving to help people make better decisions.
That's amazing. Yeah.
That's fantastic. Well, Josh, thank you so much for joining us. But wanted to give you the opportunity to share with everyone maybe how they could follow you, or they could see what you're up to on LinkedIn. Maybe if you post there, or where people could go to learn more about NewRoad's Capital Partners.
Well, so certainly you can reach me on LinkedIn, and our company website is newroadcp.com. I'd welcome you to go there to get more information on it, and look forward to the rest of the conference, and thank you for having me once again.
Absolutely. Thank
you very much. Yeah.
Be sure to subscribe to the podcast to maximize your supply chain. Available on all major podcasting channels. Thank you for listening, and see you in the next episode.